Alright guys, this is a strategy I'm about to share with you. We have about 110 pip move forecast in this particular strategy. As you can see right there, 114 pips, price move for like 119 pips, and basically I'm going to be sharing with you. This is a very high confluence entry technique, guys, and if you check, you see some, we had this forecast, okay, price actually moved that way. So I'm going to share with you. You can see this is a supply zone. At the same time, we have many confluences to take this trade. So I'll share with you this circuit strategy you can use in trading any market, and you'll be able to cash high winning probabilities that can be like 90% win rate, guys, in any market. So make sure you watch to the end. No matter what you're trading, forex, indices, volatility 75, whatever, this strategy is amazing, guys. Make sure you watch to the end. In this strategy, simply we are going to be seeing how supply and demand zone works, how you can combine supply zone and another confluence, which is an example of the trade setup that I actually just showed you to you guys. Now you see that in the market, when price is actually creating lows, like in this situation here, price will mostly like to pull back to supply zones. So price could pull up to zones where they will find a rejection at the resistance, or maybe at a support zone, or maybe form a chart pattern. All right, because sometimes when price reverse, it usually tends to create what we call a chart pattern, and then it drops eventually. All right, now you see that this zone here might sometimes coincide. It might be a supply zone here, it could be a resistance zone there, it could be whatever. Now, to identify a supply zone when price is moving downward, you look for what? Violent candlesticks. Okay, so you look for what? Violent candlesticks that move price down with very strong momentum. And if you look at our chart very well, you are going to see we had that strong momentum. All right, and when you look at that momentum, you realize that if it is in a downtrend, for instance, you are going to see just bearish candles. Okay, you are going to see just bearish candles. Like in this situation, this is a zone where you only see very strong momentum candles, price creating an imbalance, and has to come back and fill it. And when it creates just red and strong momentum candles like this, it leaves behind what we call a supply zone. Now this supply zone is simply a zone where you find the last bearish candle or the last bullish candle, because if you look very well, this is the only green candle that was formed, or this is the last green candle that was formed before this strong move. All right, so always identify that. All right, and when it forms and move like this, price will most likely come back to fill these imbalances, because when it creates a very long candlestick like this, it leaves behind an imbalance here, and price will have to come back and fill or tap to the supply zone here. All right, now if you look at my chart very well, you see that what I did now is I actually identified a chart pattern as well. Like I showed you in the other example, price, sometimes when price is pulling back, it will be pulling back in form of what? Rejection. It will be pulling back in form of a chart pattern. Maybe after a strong down move like this, price will start pulling back like this, and then you realize that you start forming a pattern until when it gets to the zone where it has to reverse. And in this pattern, you can equally just use your trend line tool and then you plot it out. Okay, you wait for price to come and hit at this level, and then you take your sell trade. Now if you look at it here, this is the live example that we had here, why price was pulling back to hit to the zone, because most time when it taps to this zone, it will drop powerfully. What we do now is we just pick our trend line. Okay, we connect to make our pattern, our chart pattern. Remember, we have our different chart patterns, guys. We have different chart patterns, and you can just connect like that. Okay, so once you connect, you wait for price to come up and then tap the zone. And if you connect like this, you can equally connect below, because sometimes you form a flag pattern. This is a very popular pattern, which is a reversal pattern, and you are waiting for price to come back, to come up and then tap this zone here. Now if you see, we already have good confidence, because as price gets here, it gets tapped, it comes back, it get rejected, it get rejected, it get rejected, until when it will reach the supply zone. And when it reach the supply zone here, it will be a very high confidence entry, because we have what? Two confluences. We have a supply zone, and it has tapped the upper part of this zone here, and eventually when it reach here, that's where we'll be taking our trades, and price is going to most likely drop powerfully. Right, that's where you saw that we were able to predict that 119 move pips move, though we only had to forecast, we only had to take our profits at this level here, right? And that's why you saw us, did give this, all right, because price was going to pull back to a supply zone, and at the same time at the rejection, so we forecasted that price was going to drop. All right, now let's see. Okay, so now we'll probably be playing, and then we'll see how it goes. All right. Okay, now price has rejected to a supply zone here. All right, what we simply do now, you see, we have our trend line coinciding at the same zone here. We have a same zone where we have our our whatever. Okay, now you see, now that we are now expecting that we short here, our stop loss in this situation should be at the top, and then your TP should be below, right? So you can use this as a strategy on just identifying a supply zone, but now this is just an additional confluence to make your win rate maybe move from maybe 70 up to 90. All right, and from there now you see that here price most likely is going to drop. Okay, it's going to drop like that. So let's see how it works out. You can see that, guys, price dropped. Look at how it dropped. It dropped so powerfully. You can see that, guy. Look at, imagine that move. That's just a wonderful move there that you can get just from doing an analysis like this, right? Increasing your high confidence, your confidence of entry. Look at the strong bearish momentum candle, because price had actually gone up and tapped to the supply zone, and it has filled up all of these imbalances that you see here, gaps where people will be looking, hedge funds will be looking, wait for price to sell so that they can also enter as well. And see that as hedge funds also join the entry, price had to drop so powerfully, guys. This is how simple it is, and you can catch trading setups just alike. All right, so you can apply the same concept in an uptrending market, right? In an uptrending market, price, when it moves down, it creates maybe is a demand zone here. All right, you might go and then comes back, and they have to tap to the zone here, and then you take a buy, and then you are waiting for price to hit higher. All right, that is just as simple as that. And that brings us to the trade setup that you actually saw us present. All right, because it was mainly based on this pattern. Okay, it was mainly based on this pattern. So basically, that is it, guys. That's how you can increase your win rate, by not just looking for maybe a supply zone, also looking for another factor, which could be like a chart pattern and whatever, that will help you to increase your win rate. So thank you for watching. I hope the video was helpful. If you find it helpful, please give me a thumbs up. Make sure you subscribe to the channel by hitting on the subscribe button and notification bell to not miss out anything, guys. And also, you can join our Telegram channel. The link is in the description. To once in a while you can get setups, you can get analysis. So see you in the next video.